AMC cost to borrow rates are still going through the roof. Currently, with the cost to borrow max at 35%. This is highlighting one thing that we will talk about here in this video. Exactly what's going on with AMC. Kind of what I expect. Possibly an end of the week rally with a lot of momentum stocks, especially something like AMC that has fallen so much as of recently, could give you back some of those losses that you have experienced, quite possibly by the end of this week. So let's get straight into it, guys. Why is the cost to borrow going up? Let's just give a moment of silence for everyone to answer this. Very simply, volatility in AMC stock. To the upside, to the downside, the cost to borrow numbers move when there's volatility. So what this is telling you is one, that just having a short position is going to cost you more. A lot of these cost to borrow rates are fluctuated. It's not like you go out and get a 30-year mortgage on your house for nowadays 6%, right? And it's going to go up or down, right? It's a fixed rate. It's going to stay the same. You have to actually refinance to get a lower rate. Not exactly the point, but the point is when you take out risky loans and short stock, which is very risky, probably the most risky thing you could do besides bridge loans in real estate, well, you're going to get a fluctuating cost to borrow number. And these cost to borrow numbers are a lot higher than what they just were, let's call it 2-3 weeks ago, before this whole split with AMC and the ape shares, right? So 35% cost to borrow max paid out on a monthly basis is a pretty big deal, and that is something that I really want to highlight. And the shorts are taking full advantage of this situation with AMC, and the short interest is continuing to climb, now at 20.24%, free flow out on loan up 25% over the last 7 days, now at about 33%. Shares out on loan about 169.5 million, days to cover at 3.45, and 100% share utilization. So on one hand, it's more expensive to have AMC stock sold short or to even borrow these shares, right? The free flow out on loan, the cost to borrows, right? And this is where a lot of people might be confused, but the cost to borrow numbers actually are for the free flow out on loan. It's not just the shares that have actually been sold short. As soon as you take possession of someone else's shares, free flow out on loan, even if you have not sold them short, even if you're waiting to sell short, you're still paying that cost to borrow. Usually the average, in between the average and the max, depending on what time of the day, what kind of volatility the stock is seeing at the time. So anywhere between 24 to 35%, that's a pretty big deal when you're talking about hundreds of millions of dollars worth of short positions or singular short positions on AMC stock. Now, why do I think this could result in an end of the week rally? Well, when you look at the option activity on AMC stock, it is pitiful. If you look at August 26th, the calls that are in the money, you have 48 options that are in the money. 48% or 48 contracts are currently in the money out of everyone's portfolios in AMC stock. 86,000 are out of the money. For next week, 56 calls are currently in the money. 31,000 are out of the money. For the week after that, 9 calls are in the money. 12,000 are out the money. For the next week, September 16th, 2,700 calls are in the money and 127,000 calls are out of the money. Now, what does this mean? Well, this means there's a very, very big ratio of calls out of the money compared to in the money. So if AMC does make a move up and could actually break out of that $10 resistance level, you will see a lot of options start to go in the money fairly quickly. And given the lack of time left to expiration, well, you would see a pretty big boost in AMC share price based off of market maker hedging activity. And pretty much the same thing is going on the put side. 71,000 puts are currently in the money for August 26th, this Friday. 6,300 puts are out of the money. So the same thing. If the puts go out of the money, when they were in the money, well, that's going to be a big problem for the shorts. So that potentially will make AMC stock go up. So there's a lot of dry powder on the sideline as far as the option activity. But what this really comes down to is the Fed. If the Fed tries to talk the markets down, but they still sound bullish, well, that's going to be a big problem. Well, a big problem for, I guess you could call it, what the Fed is trying to do. It would be very bullish for the markets. The Fed literally caused this last market rally, in which they were not trying to do, but they still did, because the markets are expecting so much bearishness from the Fed. Right now, we're expecting a 50% chance of a 75 basis point rate hike still. So, or 62% probability of a 75 basis point rate hike. So it's a little bit more now, and I think reasonably so. But that even sets the bar pretty high, right? If the Fed comes out and they're any more dovish than 75 basis points at the September 21st meeting, well, that's going to be seen as likely a bullish thing for the markets. Now, depending on what the Fed says, if they don't say anything about changing the federal funds rate terminal rate, where they plan to get rates and stop raising rates, if they say nothing about that, if they keep everything basically the same, but they reiterate inflation's too high, blah, 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 same things we have heard every single Fed meeting for the last 5, 6, 7, 8, 9, 10 meetings now, well, that's probably going to be a bullish thing because we don't get new information. And which stocks are going to rally the most? The riskier stocks, the short squeeze candidates, the retail stocks. But on top of that, which AMC, I guess you could say, falls into all three of those. We're not going to get into the nuances of the terminology here, but AMC, and the fact that it has fallen so much as of the last couple of days, really could give you back some nice returns if we get a bullish risk on sentiment in the markets, which I'm not necessarily relying on that. I don't have my money on that. I do have a lot of hedges that are up 50 to 100% a piece, in which I am not selling out of as of right now, because we are going to get data overload on Friday, and I think that will be key with the cyclicality of the stock market. Around September tends to be the worst month for the stock market. Well, long story short, I'm still keeping hedges on, but I'm paying very close attention to what's going to happen on Friday. We know the Fed will speak on Friday. It's unclear if we will get any comments tomorrow. It's possible, but I wouldn't hold my hat to it. But we know Friday is going to be a big day for economic data for the Fed and what they are going to say. So I'm keeping a very watchful eye for an end of the week rally with AMC, as well as potentially APE at the same time. These two might run hand in hand and actually rally together. And I think if you're looking at AMC, one, I think you should just quite honestly own both. If you're if you were in AMC, you should probably own APE as well. I think it would be kind of stupid to not own both of them, especially if you have gotten them for essentially free, right? It was like a stock split when it comes down to it. You really want to watch $10 per share for AMC stock. If we can break above $10 to get a risk on sentiment in the markets, well, it's very possible we make our way back to $15 or potentially even $18 per share. Not going to put my neck out on the chopping block here to say that's going to happen by the end of the week, because that would be a pretty big percentage move from here. That would be 100% move from here. You know, it's possible. I would say it's improbable, but it's not improbable, in my personal opinion, to get a decent move, maybe a 20-30% move. If we get a total risk on move in the stock market coming on Friday, it's possible. And like I said in a couple of the last videos, you know, when investors are looking for places to hide out, because that's what 2022 has been. It's been a hideout year. People that are actively managing funds that are not Cathie Wood, that can invest in anything, right? That are just trying to make money and follow the money. They've been investing in, at one point, it was pharmaceutical stocks for 2022, right? Big pharma. The next month, it was energy. The next month, it was momentum stocks, like your meme stocks, right? And that's kind of the latest rally that we have seen. But all throughout 2022, it's been Apple. At the same time, Apple has been that safe haven. And Apple has probably rightfully so, given their fortress of a balance sheet, but not to the same extent as we're seeing. If you start to get fears about that growth situation, about the Fed hurting the markets, what group of those stocks does not trade off of fundamentals? Well, it's the momentum stocks. It's AMC, it's BBBY, it's GameStop. Those might be seen as some market hedges, and they might actually benefit if the stock market does go through a little temper tantrum over the next couple of days, next couple of weeks. And that is not from me just saying that myself. You will hear this from analysts on CNBC, if you guys watch CNBC or Fox Business or anywhere else, that the momentum stocks could be seen as a flight to safety to a certain degree. So that's basically going to be it for this video. Hopefully you guys learned something. Hit that like button, subscribe to the channel, comment down below your comments, questions, or concerns down below in the comment section if you guys have any comments, questions, or concerns, and get yourself those free stocks with Webull, Moomoo, and Public down below in the description of this video as well. You guys enjoy the rest of your day, and I will see you in the next one.